A stronger than expected year-end has given Nedbank a boost. The lender anticipates that its annual headline earnings per share will be as much as 3% higher than the previous comparable period. But basic earnings could plunge by up to 55%. This due to IFRS accounting standards related to Nedbank's sale of its 21.2% stake in EcoBank to Basket Investments for nearly 2 billion rand. This move solidified the group's West African exit. The company is currently looking to expand its East African footprint with the acquisition of Kenya-based lender NCBA in a deal valued at around 14 billion rand. More detail on this and the numbers will be provided when the bank opens its books on the 3rd of March. Discovery expects its first half headline earnings to rise by almost a third, driven by strong operational showing, especially from Discovery Bank. The unit is performing ahead of schedule, acquiring an average of 1,500 customers per day. Discovery Bank is expected to bounce back from a loss of 145 million to profit of up to 230 million rand. Discovery Health adds to this boost with strong new business growth. The group reports results on Tuesday, the 3rd of March. Outsurance is eyeing higher earnings. In a voluntary trading statement for the 6 months ended 31 December 2025, the group alerts the market that it's delivered a satisfactory operational and financial performance during the period. Headline earnings per share is projected to increase by between 11 to 17%, underpinned by a strong gross written premium and annualized new business growth across the group's core direct short-term insurance operations. Outsurance will report half-year results on Wednesday, the 11th of March. Robust, and that's how Tiger Brands describes the first 4 months of its financial year. During the period, all business units delivered growth except home and personal care. Group revenue from continuing operations ticked up by 1%, driven by volume growth of 2%, offset by price deflation of 1%. The food producer's volume growth remains in line with guidance, while it has also maintained its double-digit operating margin. This despite the competitive consumer environment, with households facing pressure on essential costs. Truworth's interim profit has ticked up by 1.3%, supported by stronger sales in the UK. Overall, retail sales were unchanged at 12.5 billion rand during the half year. Office UK sales increased by 6.4%, offsetting weakness in the Africa business, where sales fell by 3.6%. The interim dividend sits at 321 cents, and that's up 1.3%. Spur has served up a near 14% rise in interim headline earnings per share, and this despite continued pressure on disposable income and infrastructural challenges. The casual dining restaurant franchisor notes that annual customer count numbers are up, while the average spend per head also grew above menu price inflation for the period. An interim dividend of 120 cents has been declared, reflecting an increase of 13.2%. Looking ahead this year, Spur plans to open a total of 42 new restaurants in South Africa and 14 internationally. At the half-year mark, CAP is sporting improved results. The Diversified Industrial Group reports a 32% jump in headline earnings per share, largely thanks to an easing in operating costs related to the ramp-up of PG Bison's new MDF line. The unit's production facilities, including the new MDF line, were fully utilized during the period, resulting in increased volumes and profitability. Barring optics, the group's other units, Unitrans, Feltex and Sleep Group, also delivered better results. Safripol, however, was the biggest drag on the performance due to the cyclical low in global polymers sector. In line with CAP's historical practice, no interim dividend has been declared. Eskom urgently needs to reduce emissions from its Medupi plant. The technology needed to do so will cost the power utility as much as 56.2 billion rand. Now, the reduction is needed after Medupi, along with Matimba, exposed nearly 1.7 million people to air pollution last year. Eskom is currently assessing the possible deployment of flue gas desulfurization, a technology designed to remove sulfur dioxide from power station emissions. Medupi currently operates without this, even though it was a condition of its environmental approvals and a commitment tied to a World Bank loan.